Hi, I'm Pattu from freefincal. Today let's talk about the NFO from Nippon India Nifty Smallcap 250 Index Fund. So before we get to that, I just wanted to point out that the reception to the Earn from Skills course has been fantastic. At the time of making this video, the group has 466 members. Thank you so much for your support. We had an early bird discount period from September 28th, I think, to October 5th, that is today, 9 o'clock in the morning, and many people have benefited from it. If you missed out on the early bird discount and would like to get into this course at a lower fee, you can contact me and I'll try to do something for you. So don't contact me via comments. That's not going to happen. You have to contact me privately. So let's get to this Nifty Smallcap 250 index. This is the second Smallcap 250 index fund. The first was the Motilal Oswal one, and I had already reviewed that. And passive investors get excited over every index fund that comes out. And somebody may ask that, okay, I'm already holding Nifty, Next 50. Why not I have one mid cap, one small cap into my portfolio? Anyway, I'm buying different segments of the market, so what of it? The point is there any real benefit of adding a small cap index fund into the portfolio? That too a small cap index fund with 250 stocks. It's a nightmare to manage. So even intuitively you can guess, when you are buying 30 stocks of Sensex or 50 stocks of Nifty, you are buying the most established companies. They are not going to fold overnight. Some of them have, but most of them are going to more or less hold the fort, and the volatility of these indices are fairly reasonable. They are there, it is volatile, but they're reasonably volatile. If you take the small cap segment or the mid cap segment, even there the probability of a mid cap stock becoming small cap or a small cap stock becoming micro cap or folding up altogether is fairly high, and this is the place where some kind of active management will help. Intuitively, that's what you think. Of course, active management will come with its own risks of fund manager risk and selection. There is stock selection risk, higher expenses, and so on. So we are going to look at the active small cap fund versus the small cap index to find out how well they have done. What is most important to consider is that even if you hold an actively managed small cap fund, only 80% of the small cap portfolio of that fund's portfolio will be of small cap stocks. It will still have 20% room to invest in large caps, to invest in mid caps, to invest in money, in just cash, that I mean. So to some extent there will be a little more stability in an actively managed small cap fund than a small cap index, which cannot hold that much of cash. The maximum a small cap index will hold cash is 5%, not more than that. Otherwise the tracking error will become too high. So given that there is it does make sense to pay for that active management if you want to invest in small cap small cap funds. I am personally against small cap funds, but if you do want to invest, first of all, don't choose an index fund, use an actively small cap fund, because if you were to consider the comparison for the last 5 years of these existing small cap funds, you can see most of them have consistently outperformed the small cap index. Of course, many of them did have the benefit of investing in significant amounts of mid cap stocks during this 5-year period, but still I think there is still a case for not investing in a small cap fund, and these there is a case for not investing in a small cap index fund. And if one wants to invest, choosing an active small cap fund is a better choice. However, you can see the numbers are fairly all right. Most of them have done well. And if you look at the Nifty small cap versus Nifty mid cap versus Nifty Next 50, you can see here the black is the Nifty mid cap, the red is the Nifty small cap, and the Nifty Next 50 is the green one. And the Nifty Next 50 is just as much as volatile as the Nifty mid cap. We have talked about this so many times. And if you look at the 10-year returns, you can see that the pink line, which is the small cap, has been always lower than the brown line which is Nifty Next 50 and the white line which is Nifty Mid Cap. The brown and the white are more or less the same, which essentially means the Nifty Next 50 is a much superior pick than any mid cap index or any small cap index. In fact, I would say it is a much superior pick than any actively managed mid cap index than any actively managed small cap index. So all you need is two funds, Nifty 50 and Nifty Next 50 in different proportions. I had already said that if you are happy with just 10% of Nifty Next 50 or 20% of Nifty Next 50, you can simply buy Axis Nifty 100 index fund and be done with it. But if you want more of Nifty Next 50, then you have to buy two index funds and then manage them together. And I had already said managing is not a very big problem. So there is really no benefit in buying either a small cap index fund or actually a active small cap also. However, I said before, let me quantify that. However, if you want to invest in small cap because it is some scratch you want to itch, whatever, then don't do blind SIPs. It is just not going to work. I've already made a video on this. You need to have some kind of tactical approach. I have already shown that I have a tool for this dual monthly moving averages. I have used that and back tested and shown that some kind of active management, active strategy or tactical asset allocation strategy is better than a simple SIP in a small cap fund. So you can have a core portfolio which is Nifty Next 50, and if you want, just for the sake of adventure, because we don't like to leave our money alone, we want to do something with it. Just for the sake of adventure, if you want to feel like you're doing something hands-on, you can do some kind of active tactical asset allocation in an active small cap fund and stay away from this small cap index. You can argue, why can't I do active asset allocation, active management in a index fund, small cap index fund? Maybe if you are okay with doing that, maybe. Bye bye.